Hey there, everyone. Mike Me back with PTV Fox 2 in the Bay Area talking coronavirus and money right now. We're joined once again by Winnie Sun, the managing director of Sun Group Wealth Partners. Winnie, big week this week, especially for Congress when it comes to stimulus. Millions of Americans waiting to see what's going to happen. I'll just kind of open it up with a wide question here and ask you, Winnie, what do you expect to happen when it comes to negotiations and stimulus moving forward?
Well, I think, Mike, you and I both agree it's time to have some sort of clarity. And today is the day, meaning that the Congress is back in action. They're actually back in Washington. They'll be here until August 7th. But most importantly, we're hoping to have some indication in the next 2 weeks. Because if you remember, a lot of the CARES Act provisions actually expire at the end of this month, the biggest one being the unemployment federal relief program. So really, they're saying that they are focused right now on three main things. Number one, our kids, whether or not they're going to be going back to school, what that looks like, if we're going to get funding to the schools. Number two, the big one is jobs, obviously unemployment. Other ways, are we going to get more stimulus funding? What does this look like? And lastly, vaccines, not only vaccines, but healthcare and also liability provisions for those employees who are essential workers and as well as companies, just making sure that they're safe and they're able to continue to work. And most importantly, that their employers are going to have some liability protections as well.
A lot of polls show that Americans do need this extra stimulus, especially that, there's that whole debate about the $600 extra. I mean, what can you tell us about that, Winnie? And do you think that we're going to get that or not here?
That's a big one. So we do know the HEROES Act that already passed the House just a few weeks ago actually asked for the stimulus additional $600 a week to be extended until January of 2021. Now, the Republicans have said absolutely not. We are not going to do that because it enables people to not want to go back to work, because in many times that $600 is pushing them over, so they're actually making more money by not working. Now, that being said, they're saying that we understand that jobs are still at risk. We understand that people need help, especially in 39 of the states of the country. So they're saying, well, maybe we'll continue that on. Maybe it'll be a smaller amount. And then the Republicans are also saying that we'd rather give incentives for people to go back to work instead of that unemployment relief. But I will tell you, I don't think that's going to happen. I think there's definitely going to be an error. They're going to have to continue to give some sort of federal relief on the unemployment side to piggyback on what employees are getting on the state side. There's no way around it. You're not going to be able to have this many people struggling to be able to make ends meet.
Especially with cases still on the rise for the majority of states across the country. What about retirees, Winnie? Do they have a say in this? I mean, when it comes to this relief funding, are they part of this debate here?
Retirees are a big piece of this. You may have heard that President Trump has said that, he's not going to sign anything unless it includes some sort of payroll tax deduction or payroll tax elimination, if you will, at least for until the end of the year. Now, that being said, remember, a big part of that payroll tax goes to fund Social Security benefits for our retirees. So retirees have a lot going against them because, number one, many of them can't go back to work for a number of reasons, and they're seeing the potential of Social Security benefits being decreased not only for today, but also for their children in the future. So retirees have a lot of struggle right now, for sure, that it may mean that they're going to have to delay retirement or even go back to work.
Okay. A lot of pros. Do the pros outweigh the cons when it comes to what President Trump is suggesting here, and that is the payroll tax cut?
Well, there's some pros for sure. One of the pros is that, if you're taking away the payroll tax, that means more money for small business owners, as well as their employees, because typically that payroll tax is divided between those two groups. So you have more money to spend temporarily, which is a good thing, right? Because then you can stimulate the economy, but most importantly, you can provide for yourself and your employees. But the negative to that is, again, we're taking away from the future by giving it today. So that means less money is going to be funding for Social Security benefits in the future. And we already know that there's already risk that there's going to be less Social Security benefits in the future as it is. So now you're talking about a lot of money that's not going to provide for us for when we need to retire at some point.
I think a lot of retirees, if they ever had student loans, they probably paid them off, hopefully by now. But for those watching and who do have student loans, is this going to be addressed coming up in this next big debate session here?
Yes, so Senator Elizabeth Warren has said that as it pertains to student loans, we need to do more. In fact, she's recommending that there be a provision in place to be able have for forgiving $10,000 worth of student loans per borrower, which is a big deal. We actually see a lot of support on this expectation from both parties. So let's see what happens. That's really something that we saw that was missing in the CARES Act. If you remember, the CARES Act did allow a lot of students to have forbearance on their student loans. But that being said, they didn't get a complete relief. So we'll see how that goes. I'm not sure, but there is a lot of support on this measure right now.
I'm somebody who took out student loans, and I was always under the impression like I have a credit card, I have to pay rent, have this bill, I have a car payment, car insurance, so forth and so on. Student loan debt to me was like the last bill I ever paid. In fact, there was a month or two where I didn't pay it, gave them a call and said, hey, I need a little, relief here for a couple of months. Is that still the same? I mean, I could be wrong, but would you recommend people say, if you're going to pay your bills, that's the last bill, or should that be kind of the first bill these days?
It depends. It depends if you have money to pay it, of course. But if you're really struggling, then you probably can put this off, because right now we are in a forbearance period for many borrowers. They have until September 30th, which means that it's not accruing interest on your student loans between now and September 30th. Now, if you still have income, though, this is also a great opportunity for you to continue to make your payment, maybe even make an extra payment if you can, because any bit that you pay off between now and September 30th goes right down to chipping away against the student loan principal, and that's a big deal. That's a great way to get that loan paid off more rapidly.
Okay, as we start this new work week, it looks like the NASDAQ is off to a good start right now. I think half Americans look at the markets, half don't. For those who do, and they have this problem with stress, I guess take a step back, or how do they deal with this?
Yeah, this is a big issue, Mike. And then there's been a lot of talk about this all over social media, and even our clients are saying, like, I'm so overwhelmed. And I think the thing we need to recognize is a couple of things. It's totally normal to feel overwhelmed, and it's okay to feel overwhelmed, but it shouldn't get to a point where it impacts you health-wise. If it does, there's a couple of things that I would recommend you do. Number one is find someone to talk to. Now, this can be a colleague, someone in your family, who is comfortable with the markets, the financial markets. If you don't have someone like that in your life, the great thing is there's a lot of financial advisors like myself out there, and we are trained to do this. And my clients sometimes say I'm like Teflon. So when the market impacts goes up and down, it doesn't impact me as much because we're trained to have that happen. The other thing you want to think about is to turn off the news. Like, if some of the comments you're hearing in the news are just overwhelming, take a breather for an hour or half an hour, and then get to a point where you feel better, go out to the outdoors, get a fresh air, and then come back when you feel comfortable at that point. But it's always going to be here for you, but you got to take those steps so that you can really survive this long term, because we're all in it together. And you got to remember that we're all in this together, and there's a lot of people out there who want to help you. You just have to reach out.
I'm in the news, and I need to take a breath from the news. I mean, I'll sit down on the couch at night, try to watch the evening news, and I'm like, I can't do this. I got to just put it away for like an hour or two, like you said. 401k, I checked mine the other day, thinking it was down. And it was actually hanging in there, kind of like where it was at, if not a little bit higher pre-pandemic. That kind of surprised me. Saying that I'm transitioning to, that was my answer to, okay, I'm going to still contribute, what I can. And I'm not going to hold back. What do you think, Winnie? What do you tell your clients when it comes to 401ks and continuing to contribute or not?
Well, I love that idea, Mike. I think that's great that you're continuing to contribute. If your employer is giving you a matching, then even more reason to continue to contribute. But if you're in a situation where your employer is no longer matching and you're really just, struggling to go by, it's okay to lower the contributions temporarily. That's okay. But if you have income and you continue to bring in the same income, then adding that contribution to your 401k does make a lot of sense. And if you've already maxed out your 401k, which, believe it or not, some of my clients have, then you actually should look at pairing that up with an IRA and doing the same thing. The more you can sock away right now, the better. The reason is here's a big reason too, because right now, this year, we pretty much know that taxes aren't going to go up too much higher this year and next year, right? But going forward, given how much the government is spending in these two stimulus packages, the next one's going to come in the next few weeks. That being said, where are they going to make up trillions of dollars? $3.5 trillion from the first package. This next one might be around 2 trillion, maybe 3 trillion. We're talking trillions. Then that means that you're going to probably be taxed a lot higher later on. So I'd rather pay taxes less now than later on. So take a look and consider if your 401k, Mike, is in a traditional 401k, I would certainly look at the Roth 401k right now.
Some political analysts say, you know, if Joe Biden were to win the election, when it comes to taxes, that you could expect even more taxes than if President Trump were to win re-election, I guess you could say. Out of college, this is the last question for the road here, and people who just graduated in the spring, and they can't find a job. What do they do? Where do they look for? And maybe they majored in something, but maybe they have to look outside of what they majored in and try a different sector here.
Absolutely, Mike. You know, this is something we've heard a lot about. This is a lot of people right now are struggling, especially those that just graduated. They can't find work. And those that can find work can't go back into the companies, making those connections. The advice I would give you right now, if you had just graduated, is to really stay flexible. Look for positions that you feel like you would have an interest in over what they're going to pay you. Because a lot of companies right now have ceased hiring. So those that are still bringing in employees have no trouble, and there's so much competition for those few spots. So I would say look for opportunities to intern right now. I know it's not ideal. I'm sure you want to get paid, but even if it's for some sort of credit, or even if it's like a stipend, look for an internship, get your foot in the door, make some relationships, show them what you can do, like go above and beyond right now. Show them what you can do even virtually. And then that will help you when they're looking to hire for that next position, or if there's a change. But right now, do whatever you need to do to get out there. And if you find yourself not being able to, then I would say go on LinkedIn, go on social media, and start networking.
Yeah. Get out there and shine. Do your best to shine, stand out.
Absolutely.
On all the other competitors out there. For this interview right now, and all interviews tied to COVID-19, you can watch on coronavirusnow.com, our 24/7 stream. Winnie Sun, Managing Director of Sun Group Wealth Partners. Always a pleasure to talk to you. Have a great rest of the week, Winnie.
Thank you, Mike. Talk to you soon. Take care.
Bye-bye.